Hello and welcome to News Centre. I'm Parikshit Luthra. The top government think tank NITI Aayog has released a report on crafting a policy for medium enterprises. The MSME sector contributes 29% to India's GDP and is the biggest employer with a 60% contribution to the overall workforce. But the disparity is stark. Only 0.3% of the MSMEs contribute to 40% of all MSME exports. The NITI Aayog wants to leverage the untapped potential. The report focuses on tailored financial tools, technology integration, skill development and creating a centralized digital portal. India's economy continues to grow even as the pace of growth has moderated. India is poised to overtake Japan as the fourth largest economy by the end of this year, according to estimates by the IMF. But there are some growth pangs. Growth in core sector slowed to a mere 0.5% in April, according to government data. Net foreign direct inflows also declined to just 353 million in FY25 compared to more than $10 billion in FY24. I spoke to noted economist, former CEA and member NITI Aayog Arvind Virmani on the state of the economy and the report on designing a policy for medium enterprises. I began by asking him about the India's current policy structure to support MSMEs and why it is inadequate.
The budget, one of the important points in the budget was that focus on MSMEs, among other things, and particularly the emphasis on labor-intensive exports to generate employment. So, in NITI we had commissioned a study. So of course, we talk about MSMEs, which includes micro, small, medium enterprises. So NITI wanted to drill down further into these somewhat diverse elements of industry. They are all most of them are informal, some of them are part of the formal sector. So for that purpose, this study was launched on the kind of medium size enterprises, as they are called, and in particular to see what are the schemes, how are they performing. There are a whole bunch of schemes, in terms of technology adoption, credit, and skilling, etc. But the aim of the study was to drill down and see which of them were applicable to the medium enterprises and what they were used, etc. And then further recommendations to that effect. So the study found that about 8 schemes are applicable, and it's made some other recommendations.
Okay. When it comes to incentives that are needed, according to you, what are the targeted incentives needed for the future?
See, there are general things which apply to everybody, and we've been talking about those, the ease of doing business, the basic infrastructure, skilling, etc. Skilling is always very important. So what is special? Yes, I think what is special about the medium industries is that they do a large part of the export. So in some sense, they are closer to the frontier. They have to compete in terms of quality and cost in the international markets. And secondly, they will also play an important role. We've been talking a lot about supply chains recently, in the context of mobiles, mobile phones, etc. So medium industries are important for both those purposes, to link in for backward integration of the supply chains, etc. So I think the focus on skilling, for example, skilling, when we talk about textiles, or simple thing like, let me give you an example, like stitching. Now, the stitching skills which are needed for cotton may be very different from leather, and they may be different from mixed fabrics, etc. And there are all these many variants of fabrics, etc., which are used, which are exported, etc. So there's a need for finding out and meeting these requirements. So skilling is very important and special, and it's not high skills. When we think of skills, we think what are the highest skills? That's not it. It's the medium skills, the actual skills which will be used by these medium industries to export, to supply high quality goods to the supply chains. So there are elements like that which may be common among industries, but you have to have a special focus and differentiate the kind of stuff which is needed.
Shifting focus to certain economic issues right now, sir, which concern us. One would be about the sharp fall in FDI in 2025. What would be outlook going forward? We've seen a sharp drop in FY25 to a record low of $353 million in FDI. Why do you think this happened, and what would be your outlook for the months ahead?
Right. Yeah, this is a very good question, because I think not many people look closely at this issue. And when we look at FDI inflows, there is a gross amount of FDI inflows and a net amount, and I will discuss the difference. But what has fallen, what has not fallen, is the gross FDI. That fell a little, that reduced a little bit, but is almost back to the peak seen earlier. What has indeed reduced quite substantially is the net FDI inflows. Now, there are two elements, if we subtract gross from net, there are two elements which constitute that, which implicitly have increased actually, because it's a minus. So one is remittances, that is retained earnings of foreign invested enterprises. When they are remitted back, that is a negative. It's subtracted out of gross FDI. And the second element, of course, is what you might think of normally, the disinvestment. So some preliminary, very preliminary investigation that we have done, I have done, show that one of the important factors was a kind of collateral effect of the removal of the DDT. I don't know if you remember the DDT. It was the dividend deduction tax. So when any company gave dividends, they would have to pay a tax. So if foreign company remitted dividends back to its equity owners, they would have had to pay a tax. So when the DDT was abolished, that provided an opportunity. So a part of that was just using this opportunity to remit the retained earnings which they had held in the companies. So clearly that is a temporary phenomena which will go away. There were some other which will not be there in future years. Then there were a number of other elements, and the exact proportion is not clear, but I can just mention them. One of them was the strong growth of the U.S. economy, after that period, let's say for the last 3 years, not necessarily now in 25, but previous years, and the higher equity returns, the foreign exchange appreciation, etc. That is one of the, that's a second factor which kind of encouraged foreign companies to remit their equity or even the retained earnings. And the third factor was this diversification. For example, again, this is slightly speculative, but not 100%, that there were the same companies which are here were also looking to diversify to Southeast Asia in terms of supply chains which were relevant there. For example, you heard of shoes in Vietnam, etc. So some of this may have also been using Indian funds because Indian stock markets are very strong, so it's easier to sell and use this money for diversification. They already had enough money here for diversification internally. So those are some of the factors, and my own judgment would be that most of these are temporary, and we should see a return to more normal even in the net FDI flows over the next few years. That does not mean we must not, we must still, of course, aim to increase the gross FDI much higher, and not rest on the laurels that we had some peak 2-3 years ago.
Okay, so when it comes to an investment-friendly charter, because the Prime Minister in the Governing Council meeting also said that we need an investment-friendly charter, what do you think the focus should be for FY26 right now, sir, considering we've had a record low in terms of FDI, but if you want to push things, want to make India a more attractive destination, what more needs to be done?
So, all these things, you may have heard that the NITI has been working on an index of investment attractiveness. Why is that? because, India has 28 states, and some of them are getting more FDI in manufacturers, others are getting less. And I think our aim is to help the lagging states to attract more FDI. So on the directions of the Honorable Prime Minister, we have been making an index which is now in phase 2 and should be completed in the next few months, which will give an idea of how attractive each state is in terms of manufacturing investment, including to FDI investors. And secondly, given that the details or the sub-indexes will help these states in seeing what needs to be corrected. So in NITI, we can't really, in a sense, direct states in any way to do something, but to kind of promote competitive and cooperative federalism. These indexes which we have developed help the states who want to improve,
right,
identify where they may be lagging, and improve that. I think that is one important factor which will help improve their performance of the relatively lagging states.
Right.
There are also, we are the skills we mentioned. You talked about skills. Some of the problems vary across states. So all these things, I have traveled to 3 or 4 states to find out where the differences are. When we make a scheme, we make for all states, and it's important to kind of drill down. Of course, the states themselves are doing and trying to identify. So whether it's skilling, whether it's infrastructure, of course, we have these schemes on centers, sector-specific centers, but we sometimes forget that there are legacy industrial estates within urban areas. Some of those need to be improved, and so on. So there is the general policies, of course, are all there, infrastructure improvement, etc., etc. But the states themselves have to kind of focus and see what is special about their own states, where the special problems are. And in NITI, we try to help and as much as we can to identify and correct these or reform these.
Sir, I would also like to ask you about the core sector growth, which slowed down to an 8-month low of 0.5% in April. How do you think things would be here onwards?
Don't mind my saying, but when I was CA, I think 20 years ago, I actually never used this core index. Why is that? Now, I'm not saying people should not use it, but I did not find any correlation between the core index and the IIP. So frankly, in my personal analysis, I did not find this very useful. So I don't know. I think it's better to look at the individual items in the core index, whether it's railways, etc., and not really and use that to diagnose and maybe focus on the specific things. But frankly, as I said, I don't find the core index very useful for my own analysis.
Right. My final question, sir, would be about the state of India's economy and where we will be in the next 1 or 2 years. Now, there has been a lot of reportage over the last 2 days how, based on IMF data, it is being said that India is set to become the 4th largest economy by 2025. When do you think this can happen, and are we on the road to achieve that soon?
Yeah. Right. As you know, we are kind of in May of the year, so less than half the year has gone by. And again, as you know, when we talk about large economy, we always use the public, I mean, not me personally, we always use US dollar values to determine who is larger, who is smaller. Now, of course, the data for 2025 will take 7 months or more to come out. But there is a number of forecasts. I myself, I have an index which is called VIP, which I measure the economic power of different countries. And the 24 index had already told me several months ago that India's economic power is now ahead of Japan. And on that basis, I forecasted that the dollar value, which we all discussed, would exceed that of Japan most likely in 2025. Subsequent to that, as you have just mentioned, the IMF gave a very specific number for this likely GDP in current US dollars of India as being likely to be a little higher than Japan this year. Of course, we will have to wait till the end of the year to see whether that's confirmed or not, but I am reasonably confident that this will happen, and that in 25, when we have the entire data, will be larger than Japan. Now, looking forward, again, my projected index is indicating that the index economic power would be larger than Germany by 26, and therefore, in terms of US dollar value, I expect in India's economy to be larger than Japan by 27 or 28. Again, the IMF says 28. So I think by 2029, India will be the third largest economy measured in current US dollars. This is economic power. And of course, raising the per capita income of the country is a continuous effort, which we are all making. I think it's good to know that we will be the third largest economy in 28, but our goal is to sustain fast, inclusive growth over the next 10, 20 years. And so I think our goal, our job here in NITI is to continuously improve or think of ways to improve the policy environment and the macro environment to sustain inclusive growth.
All right. Thank you very much, Mr. Virmani, for joining us on the program with your view on India's growth outlook and also the NITI Aayog's latest report on MSMEs. On that note, we take a short break, but don't go anywhere. When we return, we will get you an interview with former Israel National Security Advisor on Israel's latest offensive in Gaza. Welcome back. You're watching News Center. Israeli forces have bombed a school in Gaza, killing 36 people, including children. Forces have also arrested at least 11 Palestinians during raids carried out by Israeli forces across the occupied West Bank. Since dawn, I spoke to former National Security Advisor General Yaakov Amidror to understand more about Israel's new ground offensive. Listen in.
First of all, we have to remember that this war was not initiated by Israel. Hamas terrorists coming from Gaza killed 1,200 Israelis, including 400 in a music festival. We're not speaking here about war between soldiers and terrorists. We are speaking about terrorists who came to butcher families in their houses, celebrating civilians in a festival. And now Israel is making what is needed to distract and to eliminate this terror organization. And this terror organization is fighting within its own civilians. So the only way to kill these terrorists and to achieve the target of eliminating this terrorist organization from earth is fighting inside Gaza. There is no any patent out of but fighting within Gaza to destroy this organization. And everyone has to remember again, this war began after butchering of 1,200 Israelis, most of them civilians, some of them in their houses, some of them in a music festival, women, children, old people, and so on. So the question is not why these people in Gaza had been killed, but why these people in Gaza allowed Hamas to flourish in Gaza and then to attack Israel.
Right. I would also like to ask you about the larger operation that is underway to take over the Gaza Strip. It is being called Operation Gideon's Chariots. Could you give us a sense of what Prime Minister Netanyahu is setting out to achieve with this operation, and by when do they expect to achieve it?
This operation will have two stages. One, Israel will gain military control all over Gaza, or almost all over Gaza, because there are some areas in which they are keeping our hostages. They have around 20-something hostages in their hands alive, and we don't want that they will be harmed by our attack. So it will not be totally 100% of Gaza, but it will be the majority of Gaza will be under full military control of the IDF, and then we will clean the whole area. We will go down to the tunnels. You know, they have 100 kilometers of towers, of miles of towers. We will go down and destroy all of them. We will fight on the ground to kill all these members of Hamas that's still alive inside Gaza, and there are a few thousands of them. We will destroy all the facilities that they build. And this school, for example, called school, but that was an headquarters of Hamas. Hamas is fighting behind civilian shields. What they called a school was in headquarters of Hamas. And we tried to kill the terrorists, and probably there were some civilians around the terrorists. But the only way to kill the terrorists is to bomb those shelters of Hamas, those places that Hamas is building again. And at the end of I think it will take few months of this stage, the IDF will remain controlling the area militarily, but probably a third party will come in to take responsibility for the civilian life, because we don't want to be responsible for the civilian life of the Palestinians.
Israel is now getting cornered diplomatically because of its offensive in Gaza. Its plans to take over Gaza has not gone down well with France, UK and Canada. They've condemned Israel's actions in Gaza and what Netanyahu is doing. Do you feel that there is now a risk of diplomatic isolation and falling foul of the US as well?
I don't see isolation. I see countries in Europe, not the European Union, but countries in Europe, which condemn Israel. They forgot the beginning of the war, the atrocities of Hamas, and the decision of Israel to destruct Hamas, which was at the beginning was very well agreed by those countries. After it was clear what Hamas tried to achieve and what Hamas did on the ground, including raping women and killing babies. Now everyone in Europe is forgetting it. Israel doesn't, and Israel will fight, not because, with all respect to the European Union, to European countries, and all these leaders which are condemning Israel. Right. The responsibility for the security of Israel is not in the hands of the European countries. It is in the hands of the Israeli government, and the decision of the Israeli government up till now is very clear. We are continuing the operation to destruct totally Hamas military capability in the Gaza Strip. Right. And we always remember that war was imposed on Israel by the atrocities of this terrorist organization that should not continue to exist in Gaza.
General Yarov, thank you for joining us on the program, giving us your views on the operation, the stage at which it is right now, and what Israel sets out to achieve.